Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go. It's generally related to three different topics: wealth building, commodities, and or financial topics. So let's dive in there. Let's take a look and see what people are sharing. If you want to follow me at finding_finance, and if you want to join our community, finding-value.com is where I go deeper into these topics, deeper into the sectors and individual companies of what I'm interested in, and share my opinions pretty freely. So coming on down, we've got energy. Headline news. Today, the U.S. Department of Energy's Office of Petroleum Reserves announced that contracts have been awarded for the acquisition of 3 million barrels of U.S. produced crude oil for the Strategic Petroleum Reserve. What I find kind of weird is we get this large selling pressure day that occurred yesterday, and then this news comes out that they're buying a bunch of petroleum reserves. I wonder if there's any coincidence there. Or maybe we should be buying oil at this price here too. JC Parrott says, you see that base in uranium? So this is the base here. This is Cameco, the last highs back in the last bull market, the three hump consolidation coming down, and then our new bull market that's ripping and a new all-time high is what he's got in Cameco. We've got the uranium ETF URA also with a new 10-year high working its way on higher. And CCJ is our leader. It's one of the bigger companies in the sector, and it continues to do quite well in terms of performance. Hopefully, we can see some of the smaller companies, like the developers, follow in its path. Patrick Karam says the second most important close of the year is coming up June 28th. All silver has to do is close solidly above $27 with a minimal upper wick. Easy, right? Only 19 more trading days to find out. So exciting. So what he's got here is the next important semestrial defined milestone to achieve. What we're hoping to do is close above this black line of $27. He says a solid semestrial candle close with a little wick above $27 will convert that resistance into support. The highest semestrial close ever for silver sits at $34.83 back in 2011. So that's what he's got there, sharing that information. We got Schism. Would be nice to see the miners join the party this month. They just need to open the last door. I think the HUI is ultimately destined for $522, but will need 373 taking out sooner rather than later. A lot of blue sky on the other side of that resistance, and he's got a trend line coming down here that we are trying to break out of. Right here, and that correlates with the lower 300s that he likes to see probably taken out, which is up here. So it looks good. Hopefully we can get a break here for the gold and silver mining companies so we can get moving with our portfolios. The Happy Hawaiian says oil and uranium are starting to look attractive again from a relative value basis compared to metals. We'll be shifting a bit of my metal allocation to energy. The commodity boom is only just beginning. Silver, gold, platinum, copper will keep you safe in this bull market that is coming up. So, we do have an inverted yield curve. The yield curve could uninvert, and that's generally good for precious metals. Energy does, it's not as correlated to that yield curve being inverted or uninverting. It can uninvert for a good long time, and oil can go up with the uninversion of the yield curve. But it really depends on how fast that yield curve uninverts. If it drops like a rock, generally something bad could occur if it drops like a rock. But if it slowly creeps lower, oil has generally run before a recession. It's kind of like the pin that pops the bubble. If we get that type of same scenario, we could see energy run. But I think we're really early in the commodity bull market, just like you said. And I think it could last longer than what most people think. We could get a slowdown from the tech, the tech area and money shifting in the economy differently with increasing interest rates, some crappy companies going under. That is very possible, but it's not going to be a great financial crisis like 2008 where we had real estate just eat it, because real estate's not at that it's not at that point in my opinion. But there could be some fallout in the tech area. There could be some unemployment. There could be some shifting of the economy between certain sectors of jobs moving from these sectors, like in technology, into something else. A4 Alpha says TMF, oil markets will overreact to OPEC news. It has been nearly 1 year, but the time to buy is now. In the red or on the red. The fundamental support unwinding of cuts slowly. Canadian energy remains the best quality for price available. I've added 4 of 6 this morning. Thank you. So he is buying some of the energy stocks, in particularly oil and up in Canada. I do agree with him, and we'll see if there's any follow through with the selling pressure in oil. It could be perhaps a very good buying opportunity in some of these names that are down, with oil being down. But like to see that momentum shift to the upside instead of these wicked selling pressure candlesticks that are pretty big, and they're also bearish engulfing. So we'll see. How concerned should the market be about the tech sector? Breadth is bleeding lower, just 64% above the 200-day moving average. And the software industry has been stagnant since February. So the S&P 500 software industry hasn't really been moving anywhere, and it does look like it could roll over and go lower, very similar to the 2022 move lower. He's got the technology sector in 2022 coming up, and something very similar going on in the technology sector. Are we going to get a slowdown in technology and software? I don't know, but it sure looks like it could potentially roll over and go lower, which may drag down kind of everything with it potentially. Longview Economics says, as was foreshadowed last week by the weak Chicago PMI, ISM manufacturing new orders came in incredibly weak. So it was improving from 2022 onward, but we have a pretty weak number that just was released here last week for Chicago PMI, kind of a weak number of 45, it means it's contracting. Game of Trade says a lot of investors are worried about rising yields, but oil prices tend to lead the 10-year treasury yields. With oil still seeing weakness, yields are likely to follow suit. Unless oil reverses, this intermarket signal is still bullish for stocks. And then we can see oil's been pulling back here, and we had a pretty big down day here, and yields have been kind of rolling over as well. Are we going to get a rollover in yields and oil? That is yet to be, that is all speculation. I'm still bullish on oil on the longer term. The short term always can trip people up and get people mixed because they try to time the short term market movements. I am not doing that. I'm going to hold through whatever weakness we do get here in the short term, and I'm going to ride through it. But that can prove to be painful with the volatility in it. Chart of the day, Vital, the world's largest independent oil trader, says that global jet fuel has recently recovered above pre-pandemic levels. I alluded to this pocket of strong oil demand growth in this opinion column published in early May. So global jet fuel demand being quite strong and increasing since 2020, 2019. Chris Marcus says silver is second only to oil as the most widely used commodity and has more than 10,000 uses due to its unique characteristics, including the most reflective of all the metals, a good conductor of heat and electricity, strongly resistant to corrosion and oxidation, second most malleable and tactile next to gold, antibacterial and antimicrobial properties. So, yeah, silver is used in a lot of different things. It's the second most useful element. Well, I should say thing. Oil's not an element, but European natural gas futures sour 10%. Or sorry, soar. Sour. European natural gas futures surged over 10% to above 38 per megawatt hour on Monday, the highest level in 6 months, driven by a drop in Norwegian supply due to an unplanned, and then it cut it off. So that's been going on up. It looks quite strong, making higher highs and higher lows. That's exactly what we want to see. WCI or WTIC heads up for oil. Wanted to share the alert as I know some of you have followed me because oil now clipped both those lower targets. Could still go lower into the red box or even to the shaded band. Meanwhile, I will be looking to buy or looking for a buy up next. So he's looking for a potential maybe down here into that lower 70 region. 72 something, maybe even as low as 71, which would be the end of this corrective phase in his opinion. And he's looking for potential buying positions. Peter Sutherland says, agreed, first day of USO roll each month has generally been gnarly since last September 1-2 holding reversion. It will pass. Draws are coming and the oil market is healthy. Riding OPEC bits is a favorite pastime of energy journos. But these proclamations rarely age well. So there are some oil bulls out there that are buying this dip. And some of the technical chartists are saying maybe we got a little bit further to go to the downside. And my opinion is maybe not. The short term is always the hardest to predict. News and all sorts of things can influence the price in the short term. Longer term, I think we're going up. That's where my brain's at. Sahara says for the S&P 500, maybe it's a diamond, a diamond pattern with a back test where we could head lower. That's his or her opinion. Maybe not. I don't try to time some of this stuff in the short term here. I look at the big picture view and the market conditions. The market conditions are favorable and the valuations are favorable for commodities. So I could easily see the S&P 500 or NASDAQ pull back at some point, whenever that point is. So I remain long on whatever's cheap and the market conditions favor. Those are the two that I really focus on. Peter Schiff says gold and silver are each up over 1%, but mining stock investors don't care. The GDX is flat and the GDXJ is down 0.5%. Even when precious metals prices are up big, stock investors still don't get excited. They have no confidence in the rally. That's why it's likely to continue. I think investors are kind of tripped up and they don't know which direction the market is going to go here in the short term. And maybe I'm just speaking for myself to some extent. Interest rates, they have been going up. We kind of got slapped in the face with lower interest rates today. And I think the markets are just confused on which direction that Powell wants to go, which direction rates are going to go, because that determines the movements of money flow between assets. And I don't know if the market has a solid handle on which direction or trend that rates will go in the shorter term. I think longer term rates are going to go up, but in the short term, we could get a big pullback in rates. Maybe the market does slow down and maybe something occurs on that level where the market just doesn't really know where rates are going to go and how money's going to flow here in the short term. My opinion included there. Gold, how is it looking? Been a long wait. Yet recall, I did say if you can wait and not get tired of waiting, and he's got a kind of a cup and handle pattern here that's breaking to the upside for gold. It looks fantastic. And I do think the market conditions support gold and silver going higher. They both look very good. Yesterday, it says, why Barrick Gold as well? It says a technical issue at the New York Stock Exchange on Monday caused the A-class shares of Warren Buffett's Berkshire Hathaway to appear to be down nearly 100%. Trading was halted in those shares as well as Barrick Gold and NewScale Power, which had also seen dramatic falls. What is going on here? What are with some of these companies going down like 90 something percent in a day, and they call it a glitch? And it's just like, what's going on here? Don't know. Jim Bianco says Brent crude falls below the $80 a barrel first time since February. Is this, it says, is it this easy to forecast yields? Just watch crude oil. Is OPEC more influential on the 10-year yield than the FOMC? Maybe. You can see crude oil going down with yields potentially going down here too. Mike Zaccardi says the inventory cycle is at its trough. A restocking cycle should begin soon. Bank of America. And the restocking cycle, if you look back after that slowdown or recession in 2001, you can see the restocking cycle here went up. And that is your days sales of inventory. And then the recession. We also had a recession here. You can see we came back down in 09, and then we came back up, which was a big move in stocks of 10 and 11. It's like we're doing a double bottom again. 2020 went down. We had a big restocking cycle in 21, and then we came back down 22, 23 to a very low level here. This level could correlate quite well with the level that we got in 02, where commodities went ballistic. Is that the case? I don't know. We'll find out, and we'll see if this goes on up here in the short term. JSG for the win here, and he did call this. He said WTI fair value of $74 or $4 overvalued based on current prices, weak wonky blip. And this is just a dot plot predicting where the fair value is with a certain percent of probability. Eric Nettles says, in a world where the paper market, i.e. financial demand for oil, is 30 to 50 times bigger than the physical oil market, and 65% of traded paper barrels are by algos computers, who cares more about technicals than inventory balances? There could be days when price action is not supported by fundamentals, yet sure enough, price action will set narrative. I believe today is one of those days, and that is his opinion there for the oil market fundamentals versus the paper trading and algos. Tavi says Chile's copper production remains at the same level it was 12 years ago, while global GDP has increased by at least 35% since then. To put this into perspective, Chile is to copper what Saudi Arabia is to oil, currently accounting for 27% of global production. The increasing prevalence of electric cars, electric heating, and AI is creating a significant electricity demand, potentially leading to a shortage in the global economy. This is not to mention the reshoring efforts and other green revolution-related projects that are expected to unfold, backed by $1.7 trillion in infrastructure bills passed since the pandemic. Copper's critical role in electrical infrastructure is underscored by the fact that a single chat GPT request consumes about 17 times more energy than a Google search. And here's Chile's production metric tons way down here at a 12-year low. How are we going to make all of these things? We've got copper production that is down. I don't know. We're going to find out where the price goes here shortly. A couple of quotes here. Waiting for the bottom is folly. What then should be the investor's criteria? The answer is simple. If something's cheap based on the relationship between price and intrinsic value, you should buy it. And if it cheapens further, you should buy more, says Howard Marks. Okay, that makes good sense. Now, more investment wisdom in quotes. In the real world, you uncover an opportunity, and then you compare other opportunities with that. And you only invest in the most attractive opportunities. That's your opportunity cost. Here's another one. If you're a long-term investor, the odds of experiencing a crushing bear market and a recession are 100%. Yet so many act surprised and shocked when it happens. Nornickel forecasts lower global nickel surplus and bigger palladium deficits. So that's going through there. We've got Brian Feroldi says, in the beginning, your savings rate is all that matters. Over time, your investing returns become all that matters. Focus your time accordingly. So if you don't have a big net worth, it's all about savings rate. And as you accumulate more and more savings, your investment returns matter more and more as it compounds. Incredible number. Family offices hold less than 1% in gold and only 1% in commodities. That is where they are not. People are not in gold and commodities, and that's where you should be, and money will rotate over eventually. Warren Buffett, Berkshire Hathaway, owns 3% of the entire Treasury bill market, according to JP Morgan. My Lord. Does he think a recession's coming? Maybe. Maybe that's why he's got all his money over there. Or there just isn't that many great opportunities to invest in his opinion. So he takes the cash and throws it in yields because the opportunities aren't there. And he's going to wait for a potential crash at some point to deploy that money. Is $20,000 a lot of money? I think it is. I mean, I'll be honest, guys. When I try to spend over, I'd say a couple $1,000, over $5,000 probably. If I try to spend over $5,000, I do get a little bit nervous. Anything over $5,000, I'm like, I start questioning it. I don't really want to spend the money. Any big projects like spending money for windows on a house, which is probably about $20,000, I get pretty nervous. So yeah, it's a lot of money to me. Anything over $5,000, I would say, is a lot of money to me. The first law of capital allocation is that what is smart at one price is dumb at another. Yeah, and that's how you handle risk. So your best buys in capital allocation is buying at a cheap price, is getting it at a very good price, and you could have the same company buy it at something that's 5 times the price that you bought it at. And it's not a good thing to buy. So where the price is located and the value that you're getting is really what matters. Here's silver. Silver, I'm not going to read through all that, but this is Silver Weekly. I do like the way this looks, and that's just a little bloody nose. It looks good to continue higher for silver. It looks really good. And URA also looking pretty good, almost breaking out of the cup and handle pattern here. It looks pretty solid. Peter Schiff says, what is so special about student loans? Why should some people who don't have a benefit of college degrees, but who have credit card debt, auto loans, small business loans, etc., that they are also struggling to repay, bear the cost of forgiving other people's student loan debt? That's a great question. What if your mortgage identifies as a student loan? Does that get paid off? I don't know. I just thought that was kind of interesting. Large amounts of money aren't made by buying what everybody likes. They're made by buying what everybody underestimates, according to Howard Marks. Kevin Bambro says new numbers show China has sold $102 billion in U.S. Treasury securities over the past 12 months. $100 billion dumped, $700 billion more to go. Who's tracking? Okay, and I've talked about that last time. So that's all I've got for today, guys. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you like. And we'll catch you next time. This is Finding Value.